Hey guys, welcome back to another video. Lucid Group Incorporated has had their Q2 earnings today, and they came out looking pretty rough. So today I just wanted to talk about, is this still worth investing? And if you have it, are you thinking about selling it, or are you going to add on more to your position? So let's take a look into some of these numbers that are up here that I'm looking at. It says here the Q2 earnings, they missed revenue. They came in at 97.3 million, and they were expected to make 147.5 million. So they missed on that, with an earnings per share of 33 cents actual, and it was predicted they would come in at 34 cents. So the biggest thing with this is they're cutting their production by 50% this year after Q2. And what's crazy about that is in Q1 they predicted, we're going to make 20,000 cars this year. Q1 just 3 months ago they said, okay, we're going to cut that to 12,000 cars. Now Q2 come, now they're going to go from 12,000 cars to 6,000 cars, thus the 50% cut in production. Now, in defense of them, it's a new company, and it's phases in production and automation and stuff like that, and they're going through these growing pains and these bumps and bruises trying to be successful as a new company. Tesla went through the same thing, maybe not to this degree, but as far as like working and not really making a profit and starting off, you got to crawl before you can walk. Everybody goes through this, so these are just growing pains with the company. Now, as far as the supply chain and logistic problems they're having problems with chips, the semiconductor chips, computer chips. They're having problems with certain parts on the vehicles that are exclusive to the vehicle that they can't get. A lot of it has to do with parts coming out of China and other places, and once they're getting these parts, they're trying to rush and hurry up and get them on, but they don't have the time, and it's not lining up for them to do this. So it's just basic things that, but looking at the stock price, it's presently at $20.56, and it's down. It dropped after the Q2 earnings were reported. It dropped 11.58%. Now, with those numbers just being what they are, a lot of factors got to come into play whether you still want to invest in this company or not. Now, me personally, I have a stake in a minute stake in Lucid. Am I going to bail? No, I'm not going to bail. Not yet. Because they have a demand for the cars. Like it says, I think they said they had like 30-something thousand reservations. So they got the demand. People see the car, they like it. I've seen a couple of Lucids on the road, over the past few months. I didn't even know what it was. But it doesn't look bad. Honestly, it looks better than a lot of Teslas. Tesla's got that round hood and round top, and I'm not really into the EV cars like that. I see it as very extraordinary technology, and it's the future. But from what I've seen so far, I like how Lucid cars look. But that's besides the point. I'm rambling. This is what you call like a back pocket stock. In your portfolio, you want to invest in this. Tesla's too high. You think this company has a chance into becoming something. You're all in on the EV market, but you don't want to pay $7, $8, $9, $1,000, whatever Tesla is right now. This might be a play for you. You put it in your back pocket, put a small amount in it, make it like a small percent of your portfolio, and you set it and you forget it. Dollar cost average, at will with this, and see if it turns into something. This right here is like a 3 to 5 year hold. For me, it's a 3 to 5 year play for me. End of 2024, I'll see where I'm at and take it from there. But the problems that they're going through, and this is what, you like to see earnings, because it makes the stock go up and down. But as far as what's going on with the company in the background, a lot of times the earnings can be misleading. They're still building onto that factory. So they're going to rectify these situations. And industrially wise, these are small problems, but they're good problems to have. They got a whole bunch of people that, you know, the car is in demand. They got reservations. People want it. People seen it. You know, but I mean, the supply chain and logistical problems that they have, that'll go away. You know, they'll either find another supplier or find, you know, parts are always duplicated constantly anyway. They'll figure out some type of way. They're still building onto their factory. They're still going to go ahead with the production. They're just down to 6,000 vehicles. But I mean, it's not anything I see that's stagnating them to where people are going to just be like, oh, I don't want to Lucid. You know, the wonder is there. The excitement is there. You know, some people just have to have this car. Thus, they have the reservations. But do I feel as though you should bail on it? No. If you have it, if I have it, all I can do is speak about me. I can't really give anybody any advice. A stock like this, like I said, it's a back pocket stock. You just sit in your portfolio and you just watch it. And you just keep your eyes peeled. Keep doing your studying. You look at the news and keep up with the company. And 3, 4 years from now, hell, 2 years from now, it could turn into something. They might start turning a profit. You know, see, it's different phases of trying it when a stock is, you know, small and coming out. But see, earnings like this, it separate the strong from the weak. And when I mean that, I shouldn't even say strong from the weak. Serious to not serious investors. If you believe in Lucid, you believe in the philosophy, what they're talking about, the vision they show on their website, you shouldn't even be worried about the earnings. You know, earnings can be misleading. Like, you know, they got a factory they still building off of. You know, you got to take sometimes this with a grain of salt. Now, not all earnings. Don't quote me on that. All earnings are bad or this and that. But this right here is still a play in the portfolio. In my portfolio. Because the problems they're having is normal problem. Say IBM came out with a new type of drive or something, you know, those things IBM make. And they say, oh, the production dropped, you know, because we got to drop the production because we're having a problem getting parts and this and that. They might take a hit, but it's IBM. It's established. It might be received a little different with the news, you know. But as far as Lucid, you know, you can't judge them right now. I mean, they got products that are out there. And they're going to be out 4, 5, 6 years before they can even be compared to anything else that's EV and running. You know, like Consumer Reports and all that stuff. You don't even know. These guys might have the best running the EV out. You never know. But yeah, I mean, I just wanted to chime in on that today, guys. And, you know, go over the earnings call real quick and wonder if you guys thought, you know, this is the end of Lucid, or you know how people write stuff and say things. But I mean, I'd like to know your opinion. You know, drop me a comment below. And as always, like and subscribe and share the video. And I'll see you in the next video. One more thing too. When you see earnings and they drop like this, a lot of times, don't just sell a stock because you hear somebody on TV saying, oh, well, it's bad, and it's, do your own research. Because this right here, I just think is smoke. It's not fire. And really, I don't even think it's smoke. It's just the smell of smoke. You know, with that being said, man, I'm Steve. I'll see you in the next video. Take care.